Welcome back to my channel. So I believe you have watched the key candlestick reversals that I explained earlier. So I want to understand that now that you can spot the five patterns as we are moving along with this strategy combination with the um, shooting stars. So now with this one now, we are not going to make use of the line. Let's remove the line, that is linear width. Also, we don't need MACD, so let's remove MACD. What we need is only the stochastic line, and our candlestick formation. So now that you understand the pattern, what you just need to do here is very, very simple. So our focus is if we want to trade buy, our focus is this line moving, either moving within the 20 range or moving down within 10 level to form something like U, to form something like U. So once we have that, as at the time the formation is there at the oversold region, we need to check any of the candlestick pattern that happen within that range. So let's check. Let's quickly check. Now, if we look here, just take a look at this place now. It's very simple. Just try to understand it. Understand the concept. So once you understand the concept, the rest will just be like simple as ABC. Let me delete this. So this is what I'm saying. Now, you must have something like this within the range of 10 and 20. Now that you have this thing, this our stochastic line forming something like, it may form something like V, something like V, but it must be within this region of 10 and 20. So once you have it within that region, immediately you have the stochastic line posing around this region. So you just go back to your main chart to check if there is any candlestick formation that is available within that region. Now, sorry, the one for bullish, I forgot to include the bullish and bearish engulfing pattern. So please just read that one. It's very simple. Bullish and bearish engulfing pattern is an opposite of bearish and bullish arami. Just take note of that. Read bearish arami very well. So, and you relate it with what is happening with bullish and bearish engulfing formation. Now, another thing I want you to understand is when you are looking for the formation, there must be, let's assume that you want to buy, there must be a minimum of 3 consecutive bearish candle that is coming down. Now, let me show you the 3 consecutive bearish candle I'm talking about. Now, these are the bearish pressure that is coming down. Now, we have minimum. It can be 5, it can be 6. Now, if you look at this one now, we have 1, 2, 3, 4, 5. But if the candles pressure, if they are not up to 5, if they are just 3, 1, 2, 3, is valid. So with this kind of formation we're looking now, we have maximum of 5 candles, but the minimum is 3, right? Now that you we understand that, we now move to check which of the formations I've explained earlier that happens at the time you have this stochastic crosses this particular line. Now, as at the time it crosses this particular line, we have bullish engulfing pattern. These two formation is what we call bullish engulfing pattern. These two formation I'm highlighting here. So let me just take this out. This is the first formation, which is bearish. For our bullish engulfing pattern to occur, there must be a consecutive bearish bar coming down, and along the line we have a bullish pressure that engulf the real body of bearish pressure. This is our bullish candle, and this is our bearish candle. So both of them engulf, as in the bullish candle engulf bearish candle, which give us our what? Our bullish engulfing pattern. Now, draw a vertical line, because either of the candle must be present as at the time the stochastic line is crossing that range of 10 and 20. Now, if you look at red candle, which green candle engulf, you will see that as at that period, this stochastic line is still within that level of 10 and 20. Now, let's check bullish. That is bullish that engulf the bearish candle. Can you see now that as at the time there is formation of this bullish candle, the stochastic line is within the channel, within the tunnel of 10 and 20 level. Once you have that formation, once the bullish candle close, just place your buy with the next candle, which is this, and pick your 5 candles. 1, 2, 3, 4, 5. That's all. Now, let's take another one. Here we have the presence of our stochastic line floating between 80 and 90 levels. Can you see? So immediately you have it, you have this here, you have stochastic line entering this particular channel between 80 and 90. It's not necessary that it must reverse back to 80. Once you already have this particular stochastic line inside this channel, just go to your main chart to see if there is any candlestick pattern that form within that period. Now, can you see we have what? What is this candlestick formation? Okay, thank you. I believe you got it right. This is our shooting star. This is what? Our shooting star. This is our shooting star formation. So our shooting star formation happens as at the time we have our stochastic line inside the channel. So immediately after this formation close, you enter your sell signal here with 5 candles. 1, 2, 3, 4, 5. 1. So let's check again. Now we have two signals. Let me just put one, two. So let's check for another valid signals. This is our hanging man. Can you see hanging man? This is our hanging man. So as at the time we have hanging man formation, check if you have your stochastic line inside the channel. Check if you have your stochastic. Can you see it now? So as at the time we have this formation, our stochastic line is inside the tunnel of 80 and 90. So your next signal will be this. Enter cell 1, 2, 3, 4, 5. I hope you guys are following. That is that. That's another signal. That's our third signal. So let's check again. Do we have here we have our bullish engulfing pattern. Now we have four consecutive bearish pressure, and we also have what our bullish engulfing pattern. Now check either of these two formation if you have your stochastic line within that region. Can you see? As at the time we have the bullish bar engulfing bearish bar completely, the stochastic line is touching 20 level, which is very, very correct. So we can now do what? Enter our buy signal from where? We enter our buy signal from here. One, two, three, four, five. So I just want you to understand that this one does not follow any trend, or because we are leveraging on short time expiry. So because of that, this formation in combination with the stochastic overbought and oversold zone is working perfectly well. Let's check another formation. If you are if you are continue checking, you will be getting more and more of the formation, and at least with this kind of formation, there is possibility of getting almost 90 to 95% winning rate if you are using it to trade binary options, because it's very, very effective. Very, very effective. To be honest with you, it's very, very effective. All what you just need to understand is you understand the candlestick pattern very well. That at any point in time when you have your stochastic line touching oversold or overbought region, you are able to identify which of the candlestick pattern that align with that overbought and oversold region. So if you are able to identify the candlestick pattern that align with that overbought and oversold region of stochastic line, you are good to go. Just continue checking. Just continue checking. You will continue seeing series many of the value signals. Now look at this one now. We have hammer. In this formation is hammer. We have hammer and inverted hammer following each other. This is hammer. This is inverted hammer. This is, can you see that it's gap down? Can you see? If you remember our lesson on the candlestick pattern, when I'm telling you the formation of the downtrend reversals, one of the criteria is the features that need to tell you that there's going to be a kind of reversal at a point. One of those things is when you have a gap down of a candlestick pattern at the tail end of the zone. So that will give you enough confirmation that there is going to be a likely reversal. Now look at this place now. Look at this place. Immediately after this long candle, this our hammer gap down, and we have inverted hammer. Though this one is let me just give it like 78% formation of inverted hammer because of the lower shadow, a little bit long lower shadow. But if you look at these two formation, it's a candlestick pattern that is telling you something is about to happen. Now, immediately after this, can you see that the two formation is aligned with what we have on the stochastic line? So once this candle close, just place your buy trade with this 1, 2, 3, 4, 5. One, let's take. This is money. This is money. These are the things most of the professional traders they will not reveal to you. They will just be bombarded, or they will just be bombarding you with technical jargons that you will find it very, very difficult to understand. All in the name they want to pull out crowd. But this one is very, very simple. It's very, very simple. Very, very simple and straightforward. Look at it now. This is our shooting star. This is our shooting star. So as at the time we have two shooting stars happening there, which is a very good confirmation that the candle will likely reverse. This is the first shooting star. This is the second shooting star. And either of the two, when you match it or you align it with what is happening on the overbought zone of stochastic, they are in line. Can you see? It's touching 80. The second shooting star is inside the channel. So once you have this, the next one is to place your set rate. 1, 2, 3, 4, 5. Shake it now. Now the next one, look at it. We have our hammer here. This is a classical hammer because um it has no shadow. It has no shadow on above. Is very, very classical. Nothing like shadow above, nothing like upper shadow. It has long lower shadow and it has no upper shadow, which is a classical hammer. So now let's check if it aligns. Can you see? As at the time this formation happens, the our stochastic line is touching 20. Now, if we want further clarification, further confirmation, so we may ignore it and wait for another candle to form, whether there's going to be another candlestick pattern. Now, another candle forms and it's formed doji. Now, check, confirm if your doji is aligned with oversold region, perfectly aligned. So once you have this one give you go ahead that there is going to be what? A reversal of our candle. So immediately after the doji closes, you enter your buy signal with this 1, 2, 3, 4, 5. My brothers and sisters, this is very, very simple. This is very, very straightforward, direct, and no doubting of any sort that if I should place my trade, it's not that you are not going to lose some of the the executed trades, but the chances of winning almost 95 to 95% of this, if you focus on any one of these candlestick pattern in line with the stochastic, is very, very high. Please practice, understand the candlestick pattern, practice this combination of signals with the strategy, and make good money. Thank you.